Hey folks, welcome to Verified Investing. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's video, we have to deep dive into gold, silver, platinum, and palladium. Let's look at the latest charts, and ultimately, we want to see what the near-term forecast is. Now, if you've been following me for any amount of time, you know I'm very bullish longer term on the precious metals. Listen, you have a government who just continues to avoid any spending cuts. The debt continues to soar. The Fed continues to cut interest rates. All of these factors point to higher precious metals uh, based on US dollars, right? But the question is, are we going to see a better buying opportunity for these precious metals before they make new all-time highs? Let's take a look. Let's jump right into the chart. So this is your daily chart of gold. And what I always look to do here is look at the daily, then we'll zoom out on the bigger time frame to get a bigger sense. But the one thing we clearly see is that we've had this big bull run since August, right? Where gold was basically $3,300 right here. It zooms all the way up to 4,400 and is now in the process of correcting, right? Now, correcting is more consolidation, let's be fair, right? So price has come back in, we've bounced back up, we've come back in. And essentially what we have here is from this last move up, we take this low and we connect it through these lows. And look at how price has been holding this ascending trend line. And what that tells me is a couple things. So as a technician, number one, it tells me that this is support. But we also know in technical analysis, the more it hits on a level, namely this trend line here, the weaker this trend line becomes. Okay, so number one, we have highs, the all-time high connected to this secondary pivot high. That creates a descending trend line. We have these lows, which create an ascending trend line. This forms what we call in technical analysis a wedge pattern. Wedge patterns essentially tell you that the price action is digesting the recent move and deciding which way it wants to go. All right. So, again, just to draw this out for you guys, you have a down sloping or descending and an ascending trend line. Price is very volatile initially and gets tighter and tighter and tighter until it either goes up or it goes down, one or the other, right? So again, that's what we're kind of watching to see here. Now, the only inkling I get here is you look for how many times it's hitting on the support. And remember, this is just for near-term technical analysis, meaning what is price going to do over the next couple of weeks? Essentially, I want to know, do I get a better entry long gold, or do I get, is this the best it's going to get, right? In other words, is it going to come a little bit lower before it makes that longer term forecasted move to the upside? All right. Now, the one thing I can say is that the more times we hit into this trend line, and look at, so you have one, two, three, and then really four, five, six, and seven, right? So it's been hammering quite a bit on this trend line, which does lead me to have the probabilities favoring the downside move. Okay. Now, again, minimal downside. My max drawdown is back here, right? So this was the initial move up in December of 2024, January 2025 to our first high pivot. And then we've consolidated. We consolidated from essentially April all the way until the breakout in September. And then we got that last move. And so the idea here is in technical analysis, there's something known as when you have price breaks out, right? So here it comes up, checks back, breaks out, and then it comes back in. This line, that former resistance right here, which broke out, becomes technical support for that next catalyst to the upside. All right. And that's really what I'm looking at here is that right now odds favor a breakdown, which listen, it's going to have stops along the way, right? I mean, this low is going to be absolutely a support line here. There'll be another support line here. But ultimately, this zone here still remains a very likely candidate for a pullback on gold. Now, again, a lot of us would, including myself, by the way, I sit here and I say, well, why would gold pull back? I mean, you look at the ongoing issues within the US economy. The labor market is slowing, right? You have the printing of money, the US debt, you have global debt to GDP, all of these issues, and we try to overthink it. And in reality, when you have a bull move like this, it's not so much about the reality, the logic, the fundamentals. It's actually more about the technicals which are more emotion based, right? And so emotion is what drives greed and fear. And so what you could even have is we've started to see the stock market selling off. We've seen crypto selling off. Fear can be very pervasive and it can go into other things where people just get scared and want to move back into cash, or they have to actually cover margin calls. Think about liquidations in the crypto market or in the stock market with some of these drops where they actually have to sell some of their metal holdings to cover margin calls in their stock portfolios. And so there can be other reasons that can trigger gold to come back here, even though the longer term is unbelievably bullish on gold. The last thing I'll show you here, folks, is our chart here that I've gone over many times, the 1979 chart versus the 2025 chart here. They're almost identical, and you had this same up move, consolidation, massive move up, and then correction, up move, consolidation, massive move up, and now we're starting to see the correction. And the only reason I bring this up is that if you look at that move, which was this was your emotional bull market major blow off top, and then your retrace, where did we bottom out before the first bounce in gold back then? It was right at that level here, right? So right at that former consolidation high pivot, basically the beginning, that first bull move high, right? And so, and then look at when we pulled back, we came right to there, and then we started to move back up. And so the idea is this is very replica based off of that, which again, if it does break lower, this remains that level where we then head to new all-time highs. Now in the 70s, remember, things were way different. Volcker was raising interest rates, debt to GDP was 30%. Here in the US now it's 130%. So that's one of the reasons why. Remember, in 1979, 1980, gold didn't go back to the all-time highs for like 20 years plus. Here, I think we hit new all-time highs by next year. So again, I do think eventually fundamentals, and I think that's important to understand, is technicals to me give us our short-term moves. Fundamentals give our long-term moves. And I think that's an important aspect to know. All right, let's go on to the chart of silver. Now, silver's a great chart here, guys. So again, I was able to call the top on silver. Why? Well, because of this classic parallel. The lows of the financial crisis on silver to the lows of COVID. The parallel goes to the bull market of 2011. And that's where we've literally stopped in our tracks 2 times now, in fact, on the monthly chart. Or even if we go to the weekly chart, you can see the weekly went up there, rejected, weekly again, and rejected. Now, if we go to our daily chart, we're just kind of zooming in here. One of the things I'm watching is kind of the same thing as with gold. We have this very defined trend line right here. Okay, so we could use this trend line right to these lows here. And that's probably the most likely because this was that beginning of that last move up, correction into that line, bounce again and again. Now, the issue here is, as a technician, this forms the same sort of thing. It forms a wedge pattern, right? You have these highs connected, and then we have a very crystal clear upsloping. And so it's squeezing price between these two lines. Now, in regards to silver, the same thing could be looked at. We have support, 1 hit, 2 hits, 3 hits, 4 hits, and 5 hits on the daily chart. It's not as many as gold in all fairness, but it still is a lot of hits, which weakens this trend line. And that makes me think that, again, while eventually I think we break out of this parallel, this upward, this bigger parallel here again, that goes back obviously to basically '08, 2008. In the near term, there could be vulnerability to a breakdown in the charts. Where would that go? First target would be this low around 45.5. And then ultimately we could get as low as 42.75 in this range. I think max drawdown to me would be about the 40 to 39 level. Now, again, that's a big drawdown, but remember, silver has these type of drawdowns. And if we look at silver, and I'm just going to clean up the chart a little bit here, one of the things that I'm taking note of is that in terms of a pullback, right? I mean, how much would that be from the all-time high right here? So we pulled back 16% so far. That was our lowest drawdown. But even if we go back to the $39, $75, $40 level, it's only a 27% drawdown. In the scheme of this bull run, that's nothing. If you go back to COVID, right, and we do a Fibonacci retrace, look at this, folks. And this is where things really get exciting for me. All right. So number one, here's my max drawdown. And just below that, we have our 382. This would only be a 382 Fibonacci retrace. And it's almost right at that same level, around $40 to $39. All right. This one, the Fibonacci retrace is about 38, but still it's right in that wheelhouse. And so in the scheme of the bull move, if you're looking on a bigger cycle of this chart on silver, that actually would be unbelievably normal to see a retrace of that magnitude. And again, would I be buying? Absolutely, folks. No doubt about it, because I still think silver's going a lot higher. Now, let's look at the bull case. So, what if silver, okay, doesn't break this trend line, this white trend line, right? This white trend line right here, and instead breaks to the upside? How high could we go? Let's go back to our monthly chart. I want to show you something. If it does this, right? If it does this, let me change the colors on this so we can really see it here. Okay. I will draw it in first, then I can flip it. We go back here, and let's say we do, and let me get that to give me the good trend line here. We go back to our lows from '03. Basically, this is the lowest point going back to this low here, right? So if we're using a point where it's never going to dissect, what we can do here is we can draw it right through here, and then we bring it up as a parallel. Let's go to a parallel tool right there, and we can use this orange line over it, and we bring it all the way up, and this would give us our next cycle high potential. Now, this is only the bull case. This is around $57, 56 to 57. Is if we push up here, that would be your next short-term resistance line, and that's based off us going back to the '03 level. But for the most part, until I'm still neutral to bearish near term on silver and gold, until we break those highs. Once we break those highs, it's off to the races, right? Then we're talking 57 on silver, probably, maybe even 60 to 62. All right, now let's jump into platinum. Now, platinum's an interesting one, right? Because if we look at platinum here, we have a very defined trend line zone, right? So we have a very defined trend line that stopped price in its tracks. Now, I am bullish longer term on platinum, but I still think we're coming down. Notice how we have a range here on platinum right through here. This is where we're stalling. If this breaks, we should drop all the way down into this area here around 1350. That would be where I would be a buyer on platinum. If we look at our 2025 low to our 2025 high, that zone you get right between, look at this, the 50 Fibonacci and the 382. That's right in that level between 1400 and 1300, essentially. So right in this wheelhouse would be a great opportunity. I think right around 1350 for me is what I am eyeing as a buying opportunity. And again, I think that's a great, great setup there. Okay. It's also, by the way, look at what this high is right over here. What was this biggest peak high here from the 2020 COVID collapse to the high in 2021? Where is that? 1340, basically, which is right in that wheelhouse of 1350 that I'm looking at. So again, that's my buyable level on platinum. And then palladium here, I have some lines already drawn in. Notice how we went right up into these levels here, which was resistance. I already have it marked off. I'm looking to buy anywhere between 1275 and 1225. This zone here, uptrend, up a ascending trend line, horizontal trend line, that is my buyable level. So suffice it to say, folks, I am a bull on precious metals, very big bull longer term. I don't really understand how anyone couldn't be if you're looking for safety out of fiat currencies, especially with Bitcoin having the drawdown it's having right now. It's a big drawdown, right? I mean, gold's had a drawdown too, but it's obviously more stable. But we know Bitcoin acts more as a risk asset, right? So it's if the stock market declines, Bitcoin's going lower. Gold may come a little bit lower, but it's likely cushioned. But ultimately, near term, I'm still concerned that the metals are headed lower. Not very much lower, but definitely correcting a little bit more. Let's watch the trend lines I went over, and we'll go through them again later on. All right, guys, don't forget Green Monday tomorrow at verifiedinvesting.com. Come out and join us. We'll talk to you then. Take care.